dollar index resumed its upward trajectory today with the greenback gaining value against almost all major currency pairs. The Australian dollar was an exception. Inflation in Australia surged to a 5-month high, driving in its national currency up. However, like the 6 other currencies in the US dollar basket, the Aussie is unlikely to put up a strong fight against the greenback, at least in the near term, until key US inflation data is released. After all, the American currency is being supported by the Fed Reserve stance on keeping interest rates high. Neel Kashkari said yesterday that many more months of a positive inflation data are needed to gain confidence that it's appropriate to lower rates. His comments have boosted the dollar's upside potential in the coming months. This week's macroeconomic calendar includes speeches by 3 more Fed officials: Atlanta Fed President Raphael Bostic and his colleagues Lorie Logan from Dallas and John Williams from New York. So let's highlight the key market events to watch as we approach the end of the week. You're watching Traders Calendar. Australia is set to release data on building permits with the home loan rates under pressure from high central bank interest rates. Australian building permits are expected to come in at 0.7%, down from 1.9%. In this case, the Aussie is likely to lose value against its American counterpart. On the same day, the euro could gain value driven by Eurozone economic sentiment data, and the indicator is anticipated to pick up by 0.4 points to 96 in May. However, given a 0.6% drop in April, only a reading well above consensus estimates will help the euro gain upside momentum. Otherwise, the European currency is likely to remain unchanged. Furthermore, several other reports are due out on the Thursday, including data on unemployment in the Eurozone. Yet the unemployment rate is unlikely to have a major impact on the currency's trajectory, let alone fuel its bullish momentum. Firstly, the indicator is expected to remain at a much level of 6.5%. And secondly, European Central Bank policymakers are sticking to plans to cut interest rates, and even a lower unemployment rate will hardly change their stance. The US GDP growth rate and accompanying reports are likely to have a severe impact on the currency markets and not in favor of the dollar. According to preliminary estimates, GDP is expected to come in at 1.6%, marking the weakest pace of growth since the economic downturn in the first half of 2022. Given that the previous report showed that the US economy grew at a solid 3.4% pace, a nearly twofold decline in the indicator could weigh heavily on the American currency. Speaking of a currency weakness, the yen remains the undisputed leader in this anti-rating. Could data on industrial production in Japan drive it up? If the indicator is in line with the forecast of 0.7%, the yen will likely remain a loser. On May 31st, traders will receive data on inflation in the euro area, forecast for an increase of 0.1% to 2.5%. In this case, the euro is expected to rise on expectations that the European Central Bank will change its plan and leave interest rates unchanged. It's curious whether such a report will cast doubt on the dovish plans of ECB policymakers. On Friday, all eyes will be on the core PCE price index, and the so-called deflator tracks inflation across the broad range of goods and services. It's a core component which excludes food and energy, is closely watched by the Fed Reserves and the critical gauge used by policymakers when making monetary policy decisions. The indicator is forecast to fall by 0.1%. If confirmed, the US dollar is likely to suffer heavy losses. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions, and offers are welcome. We wish you profitable trading. See you soon.